What we're seeing, of course, in grain prices in 2014 is a steady decline in those prices from May, early June, down through harvest. Significant drop in the price of corn and many of our other commodities. And that's in response to the record high yield that we're seeing in the United States, over 174 bushels per acre, which is an outstanding production number. But it's interesting as we look at the implications of these lower prices then for 2015, perhaps even 2016, of what that might mean for acreage decisions next year. And it's likely with this decline in prices that we could see fewer corn acres, not only in the United States, but elsewhere around the world for 2015. And so unless we see another yield of a year of very high yields, that would result in a production number that would be somewhat lower than we've seen in 2014. However, on the demand side, on the consumption side of grain, we're still seeing very strong consumption trends. We're seeing steady on exports in the U.S., steady on fuel use, and likely with increasing livestock numbers and the incentives to feed more grain to get animals to heavier weights, increases in the amount of grain that we're using for feed. And so the implication of that would be if we don't continue with our higher production numbers, we'll start cutting that stocks to use level for 2015. So tighter stocks, which would have a positive impact on prices. So I don't anticipate that this low price that we're seeing here in the fall of 2014, given what we know right now, to continue into 2015. In fact, we could rebound that price, say from the 340, 350 level we are today, back up into that 410, 420 level as we look at harvest time prices for 2015. The implications, of course, that would be for the cattle industry is that if these higher cattle prices, the degree to which those are being supported by lower grain, if that were to shift dramatically or significantly in a short period of time, we would likely see those bids for those cattle come down. That'd be a knee-jerk response. Even though over time, low grain prices do support larger beef supplies and lower cattle prices, generally speaking. So normally cheap grain correlates more with cheap cattle. And what we're seeing today, of course, is that lower grain prices are giving a short-term response of higher bids. But in the short term, certainly if we saw higher corn prices, there would likely be some pushback on that cattle price side as well.